So let's talk about real estate crowdfunding. It's one of those buzzwords that's been floating around for a while, and honestly, it's pretty fascinating. Imagine being able to invest in real estate without having to drop hundreds of thousands of pounds on a single property. That's the beauty of crowdfunding. Basically, it's a way for a bunch of people to pool their money together to invest in real estate projects. You might be thinking, wait, can I really be a part of these big investments? And the answer is, heck yes. You can start investing with just a few £100s. There are platforms out there that allow you to get in on the action without needing to have a real estate degree or years of experience under your belt. It's like being part of a club where everyone chips in to buy a piece of the pie. You get to invest in commercial properties, residential developments, or even real estate investment trusts, REITs, without having to worry about managing the property yourself. Now, you're probably wondering how lucrative this can really be. Well, it depends on a lot of factors, like the type of project, the location, and the team behind it. Some investors have seen returns of 8% to 12% or even higher, which is pretty sweet compared to traditional savings accounts or bonds that barely keep up with inflation. But, like anything in life, it's not all rainbows and butterflies. Let's break it down a bit. First off, the ease of getting into real estate crowdfunding is a double-edged sword. On one hand, it's super accessible. You can sign up on a platform, browse through various projects, and invest with just a few clicks. But on the flip side, because it's so easy to get involved, there's a ton of options out there, and not all of them are created equal. You really have to do your homework. Research the platform, the project, and the people running it. Look for transparency and track records. If a project seems too good to be true, it probably is. Speaking of pitfalls, let's talk about the risks. Real estate can be a volatile market, and crowdfunding doesn't shield you from that. There's always the chance that the project you invest in could flop. Maybe the market shifts or the developer runs into financial trouble. If that happens, you could end up with a loss. Plus, unlike stocks, real estate investments can be illiquid. This means you might not be able to cash out your investment quickly if you need to. And let's not forget about fees. Some platforms charge management fees or take a cut of the profits. So, it's essential to read the fine print and understand what you're getting into. You don't want to find out later that a chunk of your returns is going to the platform instead of your pocket. Another thing to consider is that you're investing in a project, not a company. You don't have a say in how things are run once you've put your money in. If the project goes sideways, you're along for the ride. This lack of control can be a bit nerve-wracking for some people, especially if you're used to having a hand in your investments. In summary, real estate crowdfunding can be a fantastic way to diversify your investment portfolio and dip your toes into the real estate market without needing a fortune. But like any investment, it comes with its own set of risks and challenges. Do your research, understand what you're getting into, and be prepared for the ups and downs. If you play your cards right, it can be a lucrative venture, but always remember to tread carefully. Happy investing!